Right now in Orange County, the beginning of February 2026, when people walk in open houses across Orange County, the first question almost always comes up quickly. What is actually happening in the Orange County real estate market? Now, there is a lot of commentary out there, but once January finishes, the data starts to give us clearer direction. What we want to do here is focus on what we are really seeing on the ground so buyers and sellers can understand how conditions are actually changing today. The current inventory conditions tell us a lot. Now, when people ask, why are there still not a flood of homes for sale? It really comes down to how many homeowners are willing to move right now. In January, 2,588 homes came on the market across Orange County. Now, that number is only slightly higher than last year and still well below what a normal January looked like before COVID. What we are seeing is that more sellers have returned compared to the lows of 2023 and 2024. But many homeowners are still choosing to stay put because they have very low fixed rate mortgages that are hard to replace today. Because of that, inventory is growing, but it is growing slowly. Right now, there are 3,179 homes for sale, which is up 117 homes over the past 2 weeks. Now, compared to last year, inventory is only about 13% higher, which is a much smaller increase than what we saw at this time in 2025. What this tells us is that supply is increasing, but it is not running away. And where inventory goes next will largely depend on how active buyers become. Now, the buyer side, we are starting to see activity pick up. Over the past 2 weeks, pending sales jumped from 914 to 1,264, which is a 38% increase. This time of year usually brings the strongest improvement in demand, but the size of this move still stands out. Now, a big part of that has to do with mortgage rates. Rates have stayed below 6.5% for several months now, which we have not seen consistently in recent years. At today's levels, monthly payments are meaningfully lower than they were last year, and that has helped bring buyers back into the market. Even with this improvement, demand is still running below long-term norms, which tells us buyers are returning carefully and selectively. For buyers, that means more options and better affordability than the past few years. For sellers, it means buyers are showing up, but they are still very focused on value. Now, Christopher will break down how this translates into expected market time and what's going on in the luxury market.
It's clear from the data that demand has picked up faster than supply. Market speed has improved quickly, as we suggested it would. Expected market time, which measures how long it would take to sell all active listings at the current pace of demand, dropped from 101 to 75 days in just 2 weeks. When we see a move like that, it tells us that the market is becoming more competitive, even if it still feels slower than recent peak years. Compared to last year, homes are taking longer to sell, but compared to longer-term norms, today's pace is fairly balanced. Detached homes are clearly moving faster than attached properties, with detached homes around 70 days on market, and condos and townhomes, well, they're closer to about 80 days. Buyers continue to be more cautious with attached homes due to HOA costs and financing factors, and that continues to show up in how quickly those homes sell. You may recall we addressed this in greater depth in a prior video. We are also seeing improvement at the higher end of the market. Homes priced above $2.5 million saw a small increase in inventory, but demand increased much more quickly. That combination pushed the luxury market times down from 200 to 154 days over the past 2 weeks. When we break that down further, homes between $2.5 and $4 million are moving the fastest. Homes between 4 and 6 million are improving as well, while properties above 6 million still take longer, even though they are moving at a faster pace than they were earlier this year. For luxury sellers, this tells us momentum is building, but pricing and presentation are critical. For luxury buyers, there is still selection, but well-priced homes are starting to attract more attention. Now, when we step back and look at the full picture, the Orange County housing market is showing early signs of strengthening in 2026. Inventory is rising, but doing so gradually. Buyer demand is improving as affordability gets better. Market speed is picking up, even though it remains slower than last year. And the luxury segment is also gaining traction after a slower end to 2025. Now, if you're buying, this remains one of the more favorable environments we have seen in recent years, with more choices and improving affordability. If you're selling, buyers are coming back, but success depends on realistic pricing and strong presentation. So if you want to talk through how these trends apply to your specific neighborhood or price range, we're always happy to walk you through it and help you make sense of the market. So if you want data-driven strategies tailored to your situation, reach out. We are going to help you navigate the market with clarity and confidence. Thanks for watching, and we'll see you in the next video.